If you recently inherited $500,000 or more, one of the first questions you may ask is, do I owe taxes on this? And the honest answer is maybe. Not because every inheritance is taxed, but because the tax and the type of asset you inherited can change everything. Cash is different from a house. A brokerage account is different from an IRA. Life insurance is different from a rental property. And the wrong move at the wrong time can create a tax bill you did not expect. This video is especially for someone who recently inherited a large sum of money and wants to avoid rushed decisions. Hi, my name is Tommy Cloud. I am a certified financial planner and certified Kingdom advisor, and I'm also the founder of Third Act Retirement Planning, a company that I started back in 2000. I help people all over the country who receive large sums of money in sudden wealth make wise financial decisions before taxes, family pressure, and rushed investing create costly mistakes. Today, I want to talk you through the big tax questions to ask before you spend, invest, sell, or give away inherited money. This is educational, not personal financial tax or legal advice, of course. Let's talk about decision number one. Do not assume inheritance means tax-free. In many cases, receiving inherited cash or property is not treated like regular income, but that does not mean there are no taxes anywhere. The estate may have tax issues. Your state may have rules. The asset may create income later. And some assets, like inherited retirement accounts, may be taxable when you take money out. So the better question is not, is my inheritance taxable? Better question is, which part of this inheritance could create taxes and when? Decision number two, identify what you actually inherited. This sounds simple, but it is where many mistakes begin. Did you inherit cash in a bank account, a house, a taxable investment account, a traditional IRA, a Roth IRA, a business interest, rental property, life insurance? Each one may be treated differently. For example, I've seen people inherit an investment account and assume they need to sell everything fast. But inherited investments may have special tax basis rules, which means the tax result may not be what they think. I have also seen people inherit an IRA and assume it works like inherited cash. It does not. Withdrawals from an inherited traditional IRA may be taxable, and there may be deadlines. That is why the first step is not action. The first step is organization. Decision number three, know the difference between estate tax, inheritance tax, and income tax, and income in respect of a decedent. These words sound similar, but they are not the same. Estate tax is usually about the estate itself. Inheritance tax, in states that have it, may depend on who receives the money and their relationship to the person who died. Income tax may apply if the inherited asset produces income or if you withdraw money from certain accounts. This matters because a person may say, there is no estate tax, but that does not answer whether you owe income tax on an IRA withdrawal, rent from an inherited property, or dividends from an inherited account. Different tax brackets, different rules, different decisions. Decision number four, be careful before selling inherited property or investment. Selling may be wise, holding may be wise, but guessing is not wise. If you inherited a home, investments, land, or a business interest, the value at the date of death may matter. Appraisals may matter. You can choose an alternative valuation date if you'd like. Records may matter. If you sell too quickly without understanding your cost basis, you may report the wrong sale. If you wait too long, the asset could rise or fall in value, and that may change the tax result. This is where coordination matters. You may need an accountant, which would be an enrolled agent, or a CPA, an estate attorney, and a financial planner looking at the same facts. Decision number five. And we've talked, by the way, going back to number four, we've talked in this video time and time again about the importance of having a multitude of counselors. And the Bible says there's victory in a multitude of counselors. This is nothing new. Anyway, on to decision number five. Do not make emotional money moves before tax questions are answered. After an inheritance, people often feel pressure. Family may ask for help. You may want to pay off your mortgage. You may want to invest right away. You may want to give money to children or siblings. You may also want to do something big because you feel grief, guilt, relief, or responsibility. Those feelings are normal. But taxes do not care how emotional the moment is, as we've known. As the old saying goes, there's only two things certain in life. I have seen people give money to family before they understood their own financial security. I have seen people pay off debt, then later realize they needed cash for taxes or repairs. I've seen people sell assets before they knew what the sale would trigger. So pause before major moves. Here is the recap. Receiving an inheritance does not always mean you personally owe income tax right away, but taxes may still show up depending on the asset, the account type, the estate, future income, and what you do next. Before you spend, sell, invest, give, or pay off debt, get clear on what you inherited and what decisions may create tax consequences. If you recently received a large sum of money and you are not sure what to do next, you can go ahead and schedule a Windfall Clarity call with me. And by using the link in the description of the video on that call, we talk through what you received, what decisions may be urgent, what tax or retirement issues may need attention, what your next wise step is, and whether or not we would be a good fit to work together. This session is not for someone looking for a hot stock tip or a quick answer. I've worked with people all over the country now for 26 years. I believe I have clients in about 17 states and have phone calls from many more. And I'm here to help you if you want to have a discussion about it. These calls, though, are for someone who wants a thoughtful plan before making major decisions with sudden wealth, which I would think would be wise for anyone. We thank you for tuning in to Sudden Wealth Stewardship. And if you like it, go ahead and hit like. Tell us, I guess you can't really comment on this because you probably don't want people to know you have money. Or you can go ahead and subscribe to our channel and more videos like this will show up in your feed. We'll see you on the next edition of Sudden Wealth Stewardship.